Hi, I'm Keith Cook with REMAX Real Estate, along here with my partner David Harmon, also with REMAX Real Estate. We're going to go over real quick, rapidly, types of real estate investing that we see and what we're seeing in Whatcom County. So the main four would be residential, commercial, industrial, raw land, and we're going to dig a little bit deeper into each one of these to see if that's a right investment for you. What we're not going to get into is real estate trusts, timeshares, or fractionals. So it's a different topic. We're going to go into the main core of some of the properties we work in and what other people are looking at as well. So looking at this from an investor standpoint, and we think everyone should be able to buy a house. So it's or investment in real estate. So lots of pros and cons of owning real estate.
Right. So yeah, in residential real estate, basically you're going to have single family homes that you're going to invest in, multifamily properties, condominiums, and your purpose of this is to rent them out and create a profit, even if that's maybe buying something that you're going to flip as an investment.
Right. And so either you're going to hold it a short time or a long time. The benefit for, and they both have an advantage. And so the benefit for a short time is you buy a property for $100,000, you put a couple grand into it, fix it up, sell it, make a profit. Who doesn't like to make a profit? So that's really dependent on getting the property at a great price in order to air quote flip it. You have to get it under value and force value on it by adding the improvements with paint and carpet or whatever you need to do. So that would be that's some people's business model. There's just not a lot of homes that we can find that are out there that are dripping with equity.
Right.
Sometimes people, if you're cash, that's a big advantage to this type of scenario because sometimes properties aren't financeable. So someone will come in, fix it up, and make it so it is bank financeable, and that adds extra value as well.
Right. And sometimes you'll see in residential homes where somebody will move into a house with the intention of fixing it up. So maybe they buy it as a principal residence,
right?
But their intention is to fix it up, maybe live in it for a couple of years and then turn it into a rental and get some sweat equity and some equity in the home to create value. Or you'll see house hacking where people will buy like a duplex or a triplex and they'll live in one of the units and create some income and investment that way, hopefully covering their actual mortgage cost.
Right. The cool part, if you're in it for the long term, I think it's a safe spot to put your money. So don't look at me for stock advice because I'm not a very good picker. But with real estate, I'm a great picker because it's easy to try to find out a property that is going to either carry itself or have some control of the future. And I like you own the property, you control it. So you own the destiny versus if a stock goes up or down, you have zero control in that. So, but if you own the property, what can you do? And the benefit for long term is you get tax write-offs. You can, if you buy it, then you're going to have actually the tenant mostly making the payment for you.
Right.
And just assuming, say you're going to buy a $600,000 rental home, rent it out, and that tenant's making the payment for you. And the mortgages are typically over 30 years. Just say you pay it off in 20 years. So would you like to have $600,000 of today's money value in 20 years? Because that's what's going to happen by doing the work right now. So it's a great retirement program. Most realtors believe in that type of retirement program because a lot of realtors invest in real estate. So it makes sense to own rentals. So if you want to retire, now you have that property, you bought 20 years ago. There's no payment on it. And now that's your source of retirement income.
Right. Yeah. And as opposed to stocks, the one nice thing with real estate is it's actual tangible. You can actually drive by, look at your real estate. You can touch it. You can feel it. You can do whatever. And there's different ways to be involved, as an investor, because you can, hire a property management company and be more of a passive owner where you're not really doing the hands-on stuff, or you can be an active owner, and there are tax benefits, and talk to your CPA about that portion. But there's ways to be involved where you're not having to plunge the toilet at midnight if you don't want to be that
right.
type of a landlord.
Now, residentially, we're still under residential, and we'll go to the next one. But the nice thing also with residential, your exit strategy, there's a lot more people who are looking for residential. It sells easier than some of the other properties. Financing is more obtainable. It's easier to get lower down interest rates. It is something even where you said like you could move in, if it's your first primary home, that could become a rental, and then you move into the next home and just buy another primary home. So rentals make a lot of sense, and it's nice to have it, and it's also nice to sell it. Once you've had it for a long time, it's kind of nice to actually retire, not have to worry about those toilets at midnight.
Right.
A way around that. So the next step, I would say, is there anything to add for residential?
No, I think maybe just a quick note too on lending, as far as getting, if you're not paying cash, you're going to have to get a loan. So you're going to have to get pre-approved, and it is a little more expensive to get in. If you already own a home and you're buying a second property, on average, like 25% down is needed, but there's a lot of workarounds on that as well. But yeah, financing is a little bit different when you're buying, an investment property as opposed to your single family.
And residentially of a house or up to 1 to 4 units is going to be the absolute best interest rate of any of the next 3 we're going to go over. Right. So residential is the easiest one to get into. Right. So next one would be commercial, which would be like retail space, restaurants or commercial type of buildings that are, some people are going to own or occupy them. It might be a rental or investment. A lot of these you could potentially rent.
Hmm. Yeah, I think, so when you're looking at like office space or retail, you're kind of hitting some different markets. Some people like, having a little mini strip mall type thing where they have a lot of diversity for renters. So some people that are, can't work out of their house, like a hair salon or different things. It's a lot more difficult. So it's nice to have that, in your hip pocket.
And there's different zoning. So you could either get a standalone commercial building, or you could get like a strip mall, or like almost like a 4-unit. So it's just a commercial 4-unit or 8-unit. One advantage on commercial versus residential, you're not as much going to get the toilet calls at midnight because they're not open at midnight usually. Right. You're probably more likely going to have a tighter lease. So these people who are commercially want to make sure they're in that location for a longer period of time. So you might see a 5 or 10 year lease. And the nice thing with that, you're not dealing with the vacancy factor as much. Mm-hmm. And then they have something they call triple nets, which is where you if the insurance goes up or the taxes, you're kind of doing a pass over to the tenants or maintenance. So there's different types of leases, but a lot of times you're going to put a lot of the maintenance cost back in the tenant's plate and let them deal with it. And that's all negotiated on your lease. And that's kind of a different topic of what type of leases are out there, but it's kind of hands off. And once you've placed that person, if you got a 10-year lease and you got a good tenant, no vacancy, nothing to worry about, ideally for 10 years.
Right. Yeah. One other thing you're going to see a little bit difference in commercial over residential. Residential, you generally just have, your inspection, which you would have in commercial. But then sometimes in commercial stuff, you're going to deal with what they call a phase 1, where they're going to come in and actually do some environmental studies to make sure that, maybe there's no asbestos, there isn't any contamination. And lots of times the lenders are going to require there to be some type of an environmental background on it before they'll loan on it.
And it's a cool report to have. So they'll actually go back and do a full history of everything. It's actually, they'll do a site visit and then almost like a history visit to see what all has happened in the past. So things that you're looking for are a lot of fuel tanks are probably the main thing that people are looking for. Underground fuel tanks, and did they potentially rust, or was there any contamination? Was that on the websites as a hot site? So it's worth looking at. We can get more into that later, but it is assuming that you're going to buy something that's clean, or at least know how to clean it up if it isn't.
Right. Yeah. Commercial is a little bit more, some people are scared of it. I think there's a lot more value. Lots of times, the prices, people are afraid, but the prices sometimes are better than some residential stuff for what you get. And like he said, so it's a little bit different animal because you're dealing with a business owner. They're a little bit more savvy themselves that are leasing from you. So it's definitely where at that point in time, you really want to work with some good brokers that understand commercial stuff, because not all brokers deal with commercial stuff. So there's a lot of ins and outs of that are, a regular residential broker might not understand fully.
Right. And it could be, if we're calling these investments, it could be an owner-occupied investment too. So it's not uncommon for someone that has a business and actually wants to own the real estate. And the reason they'll do that is because they're going to put a lot of improvements that they need in there, like the tamale place. Right. So Dave helped with a brewery, and they put in, and probably $1 million. Right. I'm not saying numbers, but just what it is to put a brewery in. You're not going to want to put that in and on a month-to-month lease, and someone gives you notice that you got to move, and you just put a whole brewery for someone. Right. So that comes into play. The next one is industrial real estate. So that would be like manufacturing plants, distribution centers, and which we see a lot around here are warehouses or almost like storage condominiums type of things. And usually those are going to be in light industrial type of zoning.
Yeah, they're definitely the hot ticket item, I would say, in the last several years, especially if I have dealt with a lot of investors that, once again, coming back to the toilet plunging, the nice thing with storage units, there's a lot less moving parts to it. Typically you don't have a washer, dryer, stove, fridge, like all the stuff that can go wrong in a residential. So people are buying them for investments. They're getting pretty good returns on those as well. But I will state too that so when we were talking about commercial and industrial, some of these are zoned industrial, some of them are zoned commercial. So you got to be aware of what type of business is going to be in there. Make sure that the proper zoning is in place for that business that you're going to rent out to.
Right. For the most part, so saying condominium, it's so you can condominiumize almost like any property. So let's just say you had, residential, we think of condos as a big condo complex, but you could take a duplex and condominiumize it and split it in half. Or you could take, in this case, storage units, and if there's 10 storage units, make it so there's 10 different owners. The same thing with retail. So there's a lot of things that can have condominium ownership. When I say kind of industrial, the starting location for industrial probably are these storage condos, and the benefit that people are seeing on them, if they're either going to own or occupy them, a lot of them do with their, you need just a bunch of extra stuff. So if you have an RV or boat or extra cars or hobbies, you want to store all your stuff somewhere. A lot of people are looking at these condos for that, or rentals. And it actually, it's kind of liquid because it's an easy exit strategy. If you were to go, say, buy 3 of these storage condos versus one building, the nice thing is you could sell these down the road 3 different buyers and not have to sell them all at once, because maybe you only need enough money, or your plans are you only want to sell one. You could sell 2 or 3, but it gives you more the opportunity down the road to sell not your entire building.
Right. Yeah, and that's where you see it. Maybe somebody started a business and they started in their garage at their house, and guess what? All of a sudden they're not in compliance with the city zoning laws. So somebody knocked on their door and said, you know what, you can't be here. You need to find a place where you can run your business. So whether it's, a drywall painting company, that maybe some type of manufacturing, and it grew. So they're going to be looking for some type of an industrial area, and they don't want to go buy, a 10,000 square foot building somewhere. They just need a simple spot. So that's where, for an investor, it's good because there's always people looking to lease those spaces. And for the buyer, there's, some of these storage condos and some of the smaller stuff. It's pretty reasonable to get into.
And I would say with all 3 of these, we talked about residential, commercial, and industrial. Those are mostly what the properties are going to be zoned. So that's the main zoning we're going to be dealing with. So it's making sure that your property is zoned what you're anticipating. So if it's in a commercial area, usually they're going to bunch all the commercial properties together. If it's industrial, they'll bunch all those. And residential, because you wouldn't want to have a residential home and then all of a sudden they start putting an industrial plant next door. Which kind of brings us to the last one, which we're again looking at real estate types of investments, and it would be raw land. So basically unimproved land that people will buy. And we'll go over pros and cons of that one.
Well, yeah, I think that, there's definitely people, once again, going back, for ease, less moving parts. They don't want to deal with people, and they're good. And they've, maybe you're green at it, or you've done it before, and you just can find a piece of land. Either you can short plat it, so you can take a single one and make it into multiple properties, or you can, take a piece of property and go through all the steps with the city. So maybe it was just raw land. Nobody knew what was there. You took it through all of the steps. And now all of a sudden you actually have, blueprints for, and designs for actually putting in a neighborhood, some condos or whatever. So you've taken something that, really didn't have a lot of value. And now somebody can look at it and say, oh, wow, I can, build this, and you can sell that, raw land to a developer or whatever, that you've done all the work. But now you have something that's actually have value to somebody else.
The value, so all three types of properties can be developed. And so you'll get residential, commercial, and industrial developers. So if you were to say, here's a 20-acre parcel, and then there's the acreage, then you have to look at like what's it zoned, so what can you do with it? So it depends on which of those three zonings that you have. And to force value on it, let's just say it's 20 acres residential. It can cost a few $100,000 to go through all the permitting process to get this ready. Mm-hmm. And so you think, all right, I'm going to sell this to a big national house building company. Well, they're not going to go through and develop it for you or just say, all right, you have 20 acres and you're zoned for 200 homes. They're going to want to say, all right, show us. We want to prove. They're not going to say, here, we're going to pay you for 200 homes, because while the property's raw, the value's raw. So until you develop it and at least have the permissions, and once you get that permission, like a plat approval, then that's when the value is in there, because it's like permitted, ready to go. So, and you could run into all kinds of hitches, and the rules change. And so you might have 20 acres that you think you could put 200 homes on. You go to develop in 10 years. Well, now all of a sudden we're looking at different stormwater, which is a big deal. Like, what's your stormwater capacity? What's your impervious surface? What are your wetlands? What's your availability of water and sewer? So some of these things that may have made sense 10 years ago, it's a little risky. So usually on any land, you're going to want to research it to make sure you're satisfied. Because let's just say half of it was wet and you only get 100 right off the bat. You don't want to buy it based on 200 units if you know best case scenario you're going to get 100.
Right.
And that would work the same thing with industrial or commercial, as with setbacks and what you can run into, the hurdles. Are you really getting what you want to get?
Right. I think lots of time we see people that have property that maybe is zoned to build, 2 or 3 houses based on, square footage and what the city is allowing at the time. And the homeowner or the owner of the property thinks that this implied value, because it can be done, should be reflected in the sales price without doing any legwork, and really without doing any of the behind the scenes work to find out actually what can be done there, and actually meeting with the city, whether that's a preliminary, meeting and figuring that out. There's that value really isn't there until you actually know what can be done.
Right. And when you're dividing it, you're looking at mostly 3 types of divisions, either a short plat, which is smaller divisions. And so short plat, long plat, bigger ones, or a binding site plan for more commercial type of properties. But if you have a 10-acre parcel, and let's just say it's zoned for residentially for 5 acres each, the appraiser, the value isn't 5 acres. So if each parcel is supposed to be going for 150,000, your 10 acres isn't worth 300,000, because it's worth somewhere in between. But so it's worth more than 150, but the appraisers aren't going to say it's worth 300 based on what you have, unless you have all of the other supporting document and you're ready to divide. That would be more commercially, but residentially, the value will be based on what it currently is. If someone's going to force value, or a buyer's going to come through and look at dividing it, you could be looking $30,000, $50,000 just to divide that 10 acres into 2 fives.
Right. And
that's a big risk and time and a commitment for someone to go down that route.
Yeah, and I think the biggest thing is you're not going to fool, the savvy investors, because we deal with a lot of big time builders and contractors and stuff, and they have teams of people, so they know that you can't fake them out by saying that this is what it is, because they're going to do the research, whether it's during feasibility or even just by looking at it flat out. They can tell pretty quick whether or not there's value, and they know where their costs are to actually get it from that raw, because it's not cheap just getting it from point A to point B to where you can actually figure out what you have there, because you have land use consultants, engineers, stormwater. I mean, it's like the list and the cost can be exasperating.
No, and rules change. You could spend $25,000 on a report a few years ago, only to come to find out, oh, that report's not good anymore, and you get to spend that $25,000 again. So, it's different. We're saying these are ones to develop. Now, if you were to do a single lot that you're only going to use one use, then you're not looking at as much research because you're not looking at dividing it.
Right.
So it depends on what your use is and your long-term goals. It's kind of nice with raw land. It's a little more passive. You're not dealing with anyone, but you're missing the income.
Right.
And so, you're just missing that rental income, which to me is super important, because even on any property, if you're putting a lot of money out there, say you put $1 million into raw land, you're going to sit there and you get the benefit of getting to pay the property taxes on that. Versus if it's $1 million into something with an existing structure, whether it's residential, industrial, or commercial, you're going to have that rental income coming in. And, if you rent something for 10 years and you're getting $5,000 a month, I mean, there's $600,000 right there just in rental revenue.
Right.
So seeing where it's going to go, what your forecast is, it's kind of risky, but it can pay off quite well too. But you have to be pretty seasoned. It's not as easy to divide property now as it used to be because the rules keep on changing. So land is, I would say, a luxury. The other, but usually people are going to buy it, have some kind of idea of immediate plans with it.
Right. Yeah, it's definitely not for. I always warn people that it's not for the faint of heart if you haven't, because land is a tricky thing.
It makes sense. I mean, as long as you have an ultimate plan with it, it makes sense. So each person's individual, each property, each opportunity depends on the price, what you're going to get with it. There's something we didn't really get into agricultural land, so people are going to have that you can lease it out and get money with raw land that way too. So those are the main types of properties we deal with, and each one has its own little nuances. So we're happy to dig in further on all of these. So as usual, if you're looking for more information on any of these or want some help either buying or selling, who should they call?
Call Keith and Dave. So yeah, that's basically the 4 different types that we generally deal with. So residential, commercial, industrial, and then raw land. And I think being an investor in real estate, I think it's probably, it's something that kind of everybody wants to be involved in some aspect. And there's, simple ways to get involved in it, whether it's, buying a house that you rent some rooms out in it. That's being an investor. I mean, so there's lots of fun things that you can do with this, with a little bit of help from some great brokers like Keith and I.
Well, and I think we're in a unique situation because we work with all 4 of these, and I think you learn a little bit. So if we didn't ever sell industrial property or commercial land or condos or just Whatcom County, the way we sell with and work with all of them, they kind of commingle or intermix. So if we, I think, meet with people and try to go over what their investment strategies are, we're I would say skilled in all of these levels. So to help you out is right up our alley.
And yeah, definitely. We see, a lot of investors, they kind of morph over time because somebody might start out with that house that, they have an ADU on it. So they started, with one parcel that had an ADU on it. So they rented that out. Well, then they sold that and they bought, a triplex, and then maybe they got tired of that and they bought storage condos because they got tired of having renters, and then maybe they moved to the office space. So it's a journey for everybody that is an investor in real estate, and that's why it's fun having the background on all of them, because each aspect along the way we can help them out.
Right, and even your first residential home, your primary residence, is an investment because sooner or later you won't have the mortgage on that. So I think all in all, we absolutely believe in owning real estate. It's just a matter of trying to pick which property is right for you.
So thanks for watching. Appreciate it a lot. Keith and I both really love helping people, with their real estate needs. We do have a ton of other videos available on our website, and make sure you like and subscribe. Thank you.
Thank you.